I'm going to hand over now to Jonathan Copus, who is CEO of Getech, and he is going to lead you through accelerating the path to net zero. Jonathan, welcome. If you'd like to open your video.
Thanks very much. Thank you, Mark. Right. So hopefully everyone can see that. Thank you, Mark, for the introductory words. Thanks everyone also for joining this session. And thanks to ShareSoc for the opportunity to talk about Getech at a time that is very exciting for the group. And the presentation I have here is called Accelerating the Path to Net Zero. And in this, I will be giving you an overview of the group. I think there's also a great opportunity here to revisit our mission and strategy. And then I'll be talking about our program investment for growth and diversification, which ties back to our recent equity raising, which we closed in April of this year. Maybe it's just a starting comment. Let me just say a few words about myself. So I'm Jonathan Copus. I'm the Chief Executive of Getech. My background is that I'm a geoscientist. I worked in the oil and gas industry. I then moved out of the oil and gas industry and worked in the city for about 11 years. And I was an energy analyst, and I built a number of #1 rated teams. I then returned to industry where I was the CFO of a business called Salamander Energy, which was a $300 million a year post-tax cash flow business, which we sold in 2015. And then I joined Getech in 2016, where we completed a refocusing of the group around its products portfolio. And then we're now entering a new chapter of the business as we're working much more in the low carbon economy as well. So just some introductory words here about Getech and what we do. So we are providers of data, knowledge, and software and analytical products and services. And if you look at my staff, they fall into two groups. So about half of my staff are earth scientists. So these are geoscientists and geophysicists. So these are people who are experts in how the earth works. And the other half of my team are geospatial specialists. And the best way to think about geospatial is digital maps. So this is a map-based environment where you can put your complex geographically distributed information, and you can you can visualize that data, and you can also perform analytics on it. So it's a very powerful environment to communicate ideas and to communicate opportunity with our customers. So who are those customers? Well, our customers are energy and natural resource companies. They're also governments, states, and cities. And they're also low carbon energy investors as well. And for those customers, they are using our products to locate and manage energy and natural resource assets, and also to optimize their development. A few words about 2020. 2020 was obviously, a challenging year for most businesses globally. It was no exception for us. Our customers reduced their budgets by about 35%. But the good news for Getech was that we began the year with a very strong order book. We maintained that order book strength across the year, and we finished with an order book of £2.7 million. And we've also been working hard to build annualized recurring revenue, and that totaled 2.1 million at the end of 2020. And so order book and annualized recurring revenue, despite the macro conditions, remained robust. Now, our revenue did fall, and that was because our customers were reducing the amount of short-term project-based work they were doing. And they often buy data to support that project-based work, so data purchases declined as well. Now, to manage that revenue, we acted prudently. We reduced our costs by 26% from the 1st of May. And that allowed us to deliver or maintain our gross margin across the year. Our gross margin was 53% in 2020. And we limited the impact on our EBITDA, and we have recently reported numbers, and we had an EBITDA loss of £500,000. Net cash at the end of 2020 totaled 1.4 million, and within that figure, cash was 2.2 million. And alongside that balance sheet, we also own our office in Leeds, which is called Kitson House, and that is a £2.3 million asset. And we have expressed a plan that we will dispose of that, and that remains the intention. So financially strong and asset backed as well. I mentioned the 6.25 million fundraise in April, that to deliver a program of zero carbon investment. I'll just pause for a second though and just reiterate what our mission and our strategy are. I think whenever you look at anyone talking about climate change or the energy transition, the one thing that you always see is that what we're doing is not enough. And so we very much see our mission as to be finding ways that we can use our skills and technologies to accelerate progress to global net zero. Now, we've defined a number of focus growth areas, and these are the areas that we've recently raised money for. These are geothermal, green hydrogen, carbon capture, and also the location of strategic minerals. And to demonstrate our commitment to this path, we've recently joined the UN's Race to Zero campaign, and our pledge is to become carbon neutral by 2030. So what's the strategy to deliver all of this? Well, the first part of this is that we will be delivering this through our skills. So as I said, how can we apply our earth science and our geospatial expertise to the transitioning primary energy sector? We're also, though, working to deliver this through direct decarbonisation. And what I mean by that is the opportunity for us to take targeted investment or make targeted investments into emergent carbon neutral value chains. And we've completed the first one of these investments this year with the purchase of a business called H2 Green, which I'll be talking about a bit later. Whenever we're looking across this space, our focus is on activities that we consider to be essential, repeatable, and also strongly scalable. And we're going to be measuring ourselves not only against our carbon neutral goal, but also, of course, our generation of profit and the creation of asset value as a business as well. So focusing on the energy transition fundraise. Well, the starting point, I think, of this journey is our existing customers. And we as a business are a trusted technology partner for many of the world's largest petroleum companies, and we've worked for them for many years. We, our intention is to continue servicing those customers, and we can see that what we bring to the table helps them in two ways. So first of all, we're working to help them target the highest value, lowest carbon impact petroleum assets. And secondly, we're working in partnership with them as they themselves divest into zero energy, into net zero assets and net zero technologies as well. And this is a really important theme, which is that we are on a journey with our existing customers. Now, as we do this work, we also connect with new customers. And as I've mentioned, the areas of focus there are strategic minerals, hydrogen and geothermal. And I've also mentioned the direct investment opportunities such as H2 Green. But the commercial formula for all of these steps and all of these areas of focus is that we're looking to deliver diversified growth from predictable annually recurring revenues. And we'll be doing that through product and services sales, but also exposure to project cash flows. So moving to the operations and talking a bit more about what we've been doing and what we're working towards as well. So I think the first place to start here is our core business. And 2020 was a very busy year for us. We had a number of new product releases, software. We had a new data product called Multisat 2020, and we continued to expand our services and training. And with all the staff home working, I'm very pleased to be able to say that those projects were delivered on cost and to time. And they underline the fact that throughout this process, Getech has continued to invest even though it's been working hard to maintain its capital as well. So we continue to invest for our customers' benefit. In terms of the diversification work, the first area I was going to talk about is hydrogen. And when I talk to people about hydrogen, one of the things that I often get a feeling for is that people think of the hydrogen economy as something which kind of almost doesn't really exist yet. It's all for the future, and it may or may not happen. Well, I think it's important to say up front that hydrogen is already a $120 billion a year global market. But this hydrogen is almost entirely produced from hydrocarbons. It's called grey hydrogen. It's very CO2 emitting, and it's used for industrial purposes. But that $120 billion a year market is forecast to grow at just under 6% through to 2028. And most of that growth is associated with transport decarbonisation. And it's this transport market which is where our focus is and where our strategy in hydrogen is built. Equally, people often ask also, do the vehicles exist to deliver transport demand for hydrogen? Well, they do. And these are examples on the right here of hydrogen-powered trains, buses, and trucks, all of which are operating now, many or some in the UK, and also across Europe and beyond. And to put this market into some context, the UK commercial fleet diesel market in 2019 was a £12.5 billion market. And that whole market has to decarbonize in the near term. Now, what's the bottleneck to that? Well, the bottleneck is about green hydrogen production and distribution. So our strategy within green hydrogen is all about building value through data analytics. We have a data-led approach to the development of a national hydrogen network. And in doing this, the thing I think to remember about hydrogen is that hydrogen is a low density fuel and it's extremely difficult and costly to transport. Green hydrogen, however, can be produced wherever the customer needs it. And what we are doing is we are using our geospatial analytics and our geospatial expertise to work to identify the optimal supply hub locations for that green hydrogen. Now, what that means is that we can layer into this map-based environment the location of the land assets, who the customers are, what the infrastructure is that's out there, and we can also model it dynamically. We can look at how do those commercial fleets move. And to all of that, we can also add other important things that define timeline and deliverability, planning, logistics, safety, and other forms of regulation. And by layering up this data, we are producing location intelligence that helps us locate, rank, and build a portfolio of green hydrogen supply hubs. In doing this work, we have defined a number of workflows that help us rapidly identify target sites and also to quantify quickly their value as well. And this gives us a unique national perspective on this opportunity. It's something that is also scalable into overseas markets. And these are workflows that can also be deployed into other emergent energy value chains. So this is valuable IP that we're building, that we're putting to work here, but has other applications as well. So the vehicle that we're doing this through, as I mentioned, is H2 Green, which is a business that we built a relationship with through the course of 2020 and that we acquired in April of this year. And H2 Green's aim is to develop a green hydrogen production hub in every major population centre in the UK. And in doing this, we're building a national hydrogen infrastructure. And that's not only aligned with the government's investment plans, but it's also aligned with the government's green job growth objectives as well. And these hydrogen hubs are city-scale assets. They will be deployed on a what we call a hub and spoke model. And to be clear, each of these hubs will have hydrogen production, hydrogen storage, and hydrogen retail at that hub. And it provides the customer with two really important things that help people adopt hydrogen. First of all, is security of supply. And the second is that by building these hubs in this way, we believe that we'll be delivering them at 25% lower cost than would otherwise be the case. These hubs are strategically positioned, and we are very focused on the reuse of disused industrial assets across the UK. A typical site will be about a 10-ton a day facility at full capacity. And it's important to also note that the capex of these projects can be scaled in proportion to market growth. So in other words, you build and you invest for the market that is there now. And then as that market grows, you can add more electrolyzers, more capacity, more distribution, retail equipment as well. Where are we at the moment? Well, we have a very full project funnel, and that has now expanded to hundreds of sites across the UK. And you may have seen that earlier in the year, we announced an MOU with a business called SGN. SGN is one of the UK's major network operators, and their footprint is Scotland and the southeast of England. They are delivering gas to about 5.9 million homes in the UK, and they're investing something like £500 million a year in capex. They are, a very significant infrastructure player. We have an exclusive option with them over hydrogen development across 21 industrial sites, and we are progressing our discussions with SGN. But in addition to that, we've been accessing public and private data sets as well to expand our geospatial analysis across the UK. And why are we excited about this? Well, I think we're excited about this because of the value opportunity that this brings to Getech and to our shareholders. So putting some numbers around this, these are assets which at peak production, this 10 tons a day of capacity I talk about, they have the potential to be delivering £1 to £2 million of EBITDA each year. And our growth plan is about building 20 or 30 of these assets, which could be collectively delivering 30 or 40 million pounds of EBITDA. And if we look to the market in say 2030 or beyond, we would still only be less than 10% of that projected market. So this is a really interesting, exciting, value creative opportunity that presents transformative potential both to us and to shareholders. And it's something which can be delivered without making any heroic assumptions about demand, growth or anything like that. As this market expands, we're confident this is going to be a strongly growing market. So what's the path to profit for H2 Green? Well, I think the first part of this, of course, is about defining the first projects. And we're working on that in two ways. First of all, we are participating in a number of tenders. These are tenders that are put out by organisations such as councils who are converting their trucks and things to hydrogen. These are tenders in process at the moment, and they are for delivery of first gas in 2022 and 2023. We're also progressing a number of bespoke developments. So these are projects where we have identified demand centres and where we are putting together the groupings of businesses and companies who are needed to establish these hubs. And the kind of timeline of these in terms of first gas is 2024 onwards. So as we're doing this, we're also securing anchor customers, and we're doing this around large potential markets. And examples of these anchor customers are people like council vehicles, like I've just mentioned, bus fleets. There are hydrogen buses on the road in the UK already, and also rail operators as well. And we are forming partnerships to extend our customer reach, and we're doing this through pipeline operators, and we're also doing it through forecourt operators as well. And you may have seen a few weeks ago, we announced a strategic partnership with a group called Element 2. And Element 2's, their mission is all about putting in place 2,000 hydrogen pumps by 2030. And we can now align the development of our activities with theirs, and we believe that that will accelerate the progress towards the build out of this hydrogen infrastructure. What's the funding landscape? Well, the funding for these projects will be put in place at the asset level, and the sources of funding that we've identified and we're working to progress are strategic partners, strategic investors. They are also infrastructure investors, and they're also government. And since the UK government defined hydrogen as a strategic fuel for the UK, it's also bringing a lot more project grant funding to the table as well. So in this hydrogen business, there's a lot of news flow, I believe, ahead, and the kind of areas where that will be focused are around, you know, our asset story, around the partnerships we're building, and of course also around the funding discussions as we move towards those final investment decisions on the first operational projects. So exciting time for us in green hydrogen. Through the equity raise, though, we also raised money for two other areas as well. And the first one of these is strategic minerals. And this is very much an exercise in reshaping our products and services. So how does strategic minerals fit into all of this? Well, whichever sort of low carbon future scenario you look at, you know, one thing comes across, which is that demand for metals and other minerals is increased significantly. And this is not just in terms of volume. This is also about diversity of metals. And I think this is a great chart on the bottom left here showing the ages of energy and the increase in diversity of the kind of materials that people are using. Now, to meet this demand is a very big challenge for the mining sector. And commentators like Wood Mackenzie have put some numbers on this, you know, $240 billion of base metal and gold investment required in the next 5 years to meet energy transition demand. Now, the good news for Getech is this is a market we already have one foot in. Mining customers already use our data, and they already use our services, and they use those to identify and predict and rank potential sites for new deposits. And in a typical year, mining is about 5 or 10% of our revenue. But we believe there's a significant upside to this. And key to unlocking that upside is a process we need to go through where we're really sort of translating our products and our data into the language and the workflows of mining. And what I mean by that is we've built these tools for petroleum customers, and they have a certain way of working and a certain way of talking about their work. And there's value in these products, and we need to unlock it through this translation process. And from a kind of returns point of view, what's important to note here, I guess, is that, you know, what we're talking about is taking existing skills, products, and technologies, and we're using them to capture revenue in new markets, you know, additional revenue in these markets. And of course, yes, there is some additional investment, and I'll talk a bit about that in a minute. But it also means that we're leveraging existing investment, and that means that for every incremental pound of revenue we're delivering, you know, a high proportion of that translates to EBITDA. So this is a good way of driving profit as well as top line growth as well. So what are these kind of growth opportunities in strategic minerals? Well, first of all, we have a product called Globe. And Globe is a sort of digital twin of the Earth. It's a huge data repository, which many of the petroleum super majors use to understand the evolution of the Earth. Now, what's interesting about this is it contains many essential components that also assist in the targeting of giant mineral deposits. And we know this because we have, you know, one global user of this product in the mining space, and they have had some, you know, really good results out of it. And that has driven more interest across our customer base. So this is not something which we think might work. It's something where we have, you know, some evidence from, you know, customer conversations and needs that is saying this is a sensible path for us to be moving down. So what are the areas of planned investments? Well, there are some things we need to do with Globe to make it more relevant to mining. First of all, we need to focus on deeper Earth processes, push globe deeper into the Earth. We need to extend globe back through geological time further. And we also need to update globe's paleoenvironmental data as well. And this is a development program which we're now funded for, which we'll be delivering over the next 2 years. But already we're starting to define some potential quick wins. And 2 examples of these are copper and lithium, both extremely important metals for the energy transition. And if you go to our website, you'll see a blog we recently put out on sedimentary copper, talking about some of the ways we're repurposing our globe data for these new markets. We also see crossover opportunities. And what I mean by that is that there's the potential here to deploy geothermal and hydrogen assets with mining companies to provide off-grid zero carbon energy. And so there's definitely a kind of a greening of the mining industry, which we can be involved in through these related activities of geothermal and hydrogen. And we recognize that a key requirement for the mining sector is also the monitoring, reporting of environmental, social, and governance data. And ESG is such a huge investment driver these days. And also it's something which ultimately will increasingly dictate, the value of what you produce. And so we are also exploring ways that we can deploy our geospatial technology into this market to help with the monitoring and reporting. So I think there's a number of ways here that we can interact with these mining customers and build some very significant value. The last part here is geothermal. And geothermal is an emergent source of primary energy. It's one that has huge potential. And the reason why it has huge potential is that it is a baseload source of energy. And so why is that important? Well, there's been a lot of progress made. I mean, the UK, I think, has done a great job to date in terms of decarbonizing its electricity system. But most of that is coming through wind and solar. And wind and solar, by definition, are variable sources of power. The wind doesn't always blow when you need it. It's not always daytime. And what that means is to manage that volatility and that variability, another whole swathe of investment is going into energy infrastructure to try and compensate for it. And it's the wind and solar, of course, which has also displaced traditional areas of baseload, such as coal, and coal's not coming back. So geothermal, being a predictable baseload energy, is something which could provide, that sort of foundation stone on which energy systems are built. Now, Getech has a number of off-the-shelf offerings already in what we have. So these include our data, and also we've built heat maps for our customers in petroleum. And understanding temperature with depth for oil and gas companies is really important because it relates to the maturity of hydrocarbons. But if you step back from that application, really what you have here in the heat map is a prospectivity tool. And around this data and these heat map products, for example, we can wrap services as well, which help us demonstrate the practical value of those products. And this off-the-shelf offering is helping us access various different revenue models in this space. So, for example, the data is what we call spot data. You sell the data and you receive the revenue for it there and then. We also see the potential for expanding our license-based sales. This plays to the order book and the recurring revenue. But we also see the potential here for equity participation. So similarly to the way that we have used our skills to access asset value in hydrogen, we think there are similar ways that we can do this in geothermal through very targeted and careful investments. The other thing we're doing in geothermal is we believe that we can bring our products and services together to create a very useful geothermal solution. And this is currently in development. We call it Heat Seeker. And this helps our customers both think about geothermal prospectivity, but also site selection. And so it's bringing our geoscience skills to help solve the problems of the subsurface, but using our geospatial skills to help people understand how they can optimize their projects and plan their projects as well. And by bringing these things together, we are working, we're providing something that helps our customers rapidly high grade their potential sites for investment in geothermal. And the work on this currently is first of all, we are developing a number of case studies, which we're using to promote the product offering. We're also developing new machine learning algorithms, which are helping us improve our heat flow predictions. And then, interestingly, we're also taking existing software products, such as a tool that we have built called Exploration Analyst, and we're repurposing them into geothermal. So Exploration Analyst helps our petroleum customers decide where they should drill and where they shouldn't drill. Well, that's kind of the conversation we're having with geothermal customers as well. And we can take all of the, the sophisticated geospatial software, the tool that we've built, and we can repurpose it into this market. So another way we're leveraging our products across sector areas. So just by way of some concluding remarks, I think the first thing, or last thing to say, is that global decarbonisation, is the greatest challenge I believe that our generation is facing. It's also something which is a global challenge, but where the solutions are often very local. So I think a way that Getech can really differentiate itself in these markets is by taking our global data and our global way of thinking, and that's often very geoscience, but combining it with the local insights that our geospatial skills bring to the table. And as I mentioned at the start, we're on this energy transition journey with our customers. So this is not an exercise in doing new things in new sectors with new people. It's much more about doing new things with existing products that we're reshaping and repurposing. And very often we're doing that with existing customers. And of course, in all of that, our focus on activities that accelerate progress to global net zero. I think it's important that we act as an example in terms of what we're doing, and that's what lies behind our commitment to the UN Race to Zero campaign. And as I said, the path to this is about applying our products and skills, but also through these investments in decarbonisation products and technologies. And with the £6.25 million raised, we're now set to deliver this program of zero carbon investment. The diversification and growth focused investment is underway. And we've also begun a process of aligning our team with these goals. I'm very lucky that I have, a deep reservoir of talent within the business and a lot of passion and enthusiasm for these challenges that we're looking to grow into. We're also, though, adding domain expertise as well, and you'll have seen some announcements recently in terms of changes to Getech's board. We recently appointed a new chairman who brings great expertise in clean technology, but also business scale-up. We recently announced the appointment of a new, soon-to-be new chairman of our audit committee, and he comes from a background of low carbon, zero carbon investment. He's an investment manager in a fund which specializes in carbon neutral investment. And beyond that, we're adding to the operational team and thinking about how to position the sales side of our business, all so we can push forward with momentum and confidence into these zero carbon areas. And then the last thing I would say is really that we're very much looking forward to delivering on this program of investment, and that is going to be, I think, providing a very busy program of news flow and updates. I think that's going to create a lot of opportunities for us to communicate with the market about progress along this path. We very much look forward to having the opportunity to participate in more of these sorts of events, and to be making sure that our path is well understood, and that the progress we're making along it is well signposted as well. So I think I'll finish my presentation there, and very happy to answer any questions.
Jonathan, thank you very much indeed. I'm just having trouble following the Q&A because the order that I thought I had neatly in front of me has been changing as I watch it. But that was very interesting. The first question that I'm going to focus on is simply because you spoke about it last, which was the recent board appointments. And there is a specific tail to a question that was on that saying, do you expect any more?
Well, we've said that we're going to have a broad process of board renewal, and I think the key thing for us is about getting the right skills around the table that align with the things that we're doing. And so, we're always interested and looking for people who bring, sort of talent into all of that. So yes, I think we'll be keeping the board very much in step with what we're doing, and there's potential for more news and announcements down the track. And I think we've sort of flagged that in the past.
Thank you. And there's a question from, I'm not sure if it's a Jean or a Jean, so I'm not sure, but it's a question that aligns with one of my own, which is, why would someone as large as SGN need an early stage company like H2 Green to build the hydrogen storage network in the UK? What do you offer them that they cannot source internally or even externally from someone else? Is your offering unique? Barriers to entry, question mark. And my own question was really parallel to that. It would seem that there is a risk of internalization by a large number of your particularly major, whether they could be petroleum or mining companies. You would expect them to have a department which has access to the data and the knowledge base. So are you therefore focused on the non-major clients, and how do you protect against that internalization?
Okay. So just answering the first question, I think the first point about the work we're doing with SGN and companies similar to SGN is that we're doing something which is non-core and non-competitive to them. And what I mean by that is it's something that they probably wouldn't do themselves. And the reason why that is that you kind of need to understand how those, or I need to explain how those businesses are positioned. So SGN is it's a network operator, and what they own is they own the pipes underground that go to your gas meter. But importantly, they don't own the gas that's in the pipe. And what we're talking about here, and they don't own the gas in the pipe. What they also own, though, is that because of the way their businesses have evolved, they have quite large land portfolios of disused old gas infrastructure. And where they can, they've been redeveloping that. I mean, a very common path to redevelopment is property, but many of these assets sit in industrial areas where people don't want to live, but where actually there's quite a few of the customers we're looking to target sit in those industrial areas around these things. So given the nature of their business being a network operator who doesn't own the gas in the pipes, our proposition to them is that we can take those what are effectively dead land assets, and we can put on it equipment that will be generating gas. Well, their core market is not gas. The end customer for that gas is transport, and their core market is not transport. If there's a market for what they do, it's much more about heat. It's not about transport. And in doing this, we can present to them a high return proposition, which also is very scalable. So it's something that's not just material to someone of Getech's size, but it can be material to their size, to a company of their size as well. So, I think what we're bringing to the table here is a very creative solution to generate returns off an asset, which is otherwise probably a bit of a headache, and where we can deliver something which can be material to them as a much, much larger group. So I think it's really just like a kind of an alignment of our skills. I've also said, of course, that we can take these portfolios and rapidly rank them and prioritize them. So it means we can move quickly to market. And, and I think this is a bit of a kind of land grab at the moment in this space. But that just creates a very nice sort of synergy, between the businesses, where we can create mutual value. And that's what we're aligned to do, and that's what we're focused to do, between the parties. The second question, you were asking about, well, don't our larger customers have these things, inside their portfolios, or the skills to do these things inside their portfolios, as well? I mean, our business in petroleum is built, in large part, I suppose, on a piece of unique IP, which is our data. And we are the world's largest provider of gravity and magnetic data. We're also experts in that data. So if you're using that data, we're one of the people at the top of your list who you would come to talk to. And we're the people who supply that data to these companies. So if they have it, chances are we probably sold it to them, And the neat thing about this data is that we can refresh it through time, and we can also use our skills to make new data. And I mentioned a product called Multisat in the presentation, and Multisat is a really cool thing. It's we can use public domain satellite gravity data to build a proprietary data product. So we take something that's public domain, we apply our expertise to it, we increase its quality significantly to the point where we can make something that we can sell, and that's new data. So part of our job is always to find new things to provide to these companies, and so it's not so much, I think it's much more about us, being innovative and finding new opportunities to sell that data, for instance, to those customers. We also, we are, if you take our geospatial skills, for instance, we're absolute world experts, and so we're widely used by these companies, as a geospatial resource, either as a service or as a software solutions provider as well. So I don't think that those big companies are a threat. I think they're a great opportunity, and I think that a small fleet of foot and agile business like Getech, who can stay, at the cutting edge of the curve of the technology, can bring a lot of value. And a good example of that is, one of the core technologies our platform builds on is a thing called ArcGIS. And we in the market were one of the first adopters of ArcGIS Pro. We upgraded all of our software to it this year, and that's a real differentiator. And having done it ourselves, we can use it to help our customers on their own ArcGIS Pro upgrade journey as well. So I think there's a lot of stuff that we bring, and if you look at our customer base, our customer base ranges from the super majors all the way through to smaller independents. And so, I think the key thing here is this point that we're on this journey with those customers. Those petroleum super majors or those smaller companies are all working to decarbonize their own portfolios the same way we are. And through these strategic steps, it puts us in step with our customers. And so I think there's just this great synergistic opportunity through which we can also be growing into new customers as well, who are purer plays in these low carbon environments, be they geothermal or strategic minerals or hydrogen.
Thank you. And you mentioned your customer base quite frequently and the breadth of it, but there isn't a customer slide. Are you able to highlight names, or is that competitive?
Yeah, no, I mean, I think that the names of our customers are people that everyone would recognize. I mean, the people we work for in the petroleum market are the Shells, the BPs, the Exxons, the Chevrons, Eni, all of these sort of people. We've also worked actively with the mid-tier of independents, and we do at times work for smaller companies, and for the smallest companies, we can be an outsourced technical team for them. So I think there's an opportunity, and those customers are truly global. They're real, and we're proud of that customer base. When I said earlier that we're a trusted technology partner, that is something we're really proud of, and we want to extend that as we move into these new areas. We want to keep in step with those guys. On the mining front, once again, it's all the same sort of peoples. It's the Rios, the BHPs, through into, the independent companies. So it's a similar sort of pattern of global diversified miners through into smaller miners who are either specialists in a metal or specialists in a geography. So we have quite a broad base, and in the results we just reported, in a typical year, no individual customer in our business is more than 10% of our revenue. So we have quite a lot of diversification of revenue as well.
Thank you. Series of questions from an anonymous attendee, but we're moving into this financial sphere fairly quickly here. The first one I think we've answered, which is what's the EBITDA opportunity from hydrogen for the group? And if I'm not confused, I think you said 30 to 40 million are based on the current.
On a full portfolio, yeah.
Yeah. Second question is, and you may have answered this, is could SGN be part funding for the hydrogen sites you'll be working on?
Yeah, I mean, I think that there's obviously, discussions and conversations to be had. But the agreement we signed with SGN has two sides to it. On one side of the coin, it's about our exclusivity across these, these former industrial sites. But in exchange for that, SGN retains the option to be an investor at the asset level in these projects. And so, when I talk about strategic investors, that could be an example. But equally, there are other sorts of strategic investors who are in this space. And I think one of the interesting things, that we're seeing is that, part of what's, there's been a lot of news in recent months around the hydrogen economy, partly because of the money and the focus the government is putting on it. Particularly blue hydrogen as well as the green hydrogen that we're working in. But we're seeing a lot of significant investments from the oil and gas super majors, but also utilities as well. So people like, Scottish Power or SSE or people like that who are making, some pretty significant investments into this space as well. And it's that capital that's flowing in that is, that's clearly the crucial thing. But aligning that capital with meeting the customer's needs to accelerate the adoption of hydrogen for transport. And that's where we see our sort of disruptive role, is to do what we're doing to give people security of supply and give it at a cost of hydrogen that helps them make that switch.
Thank you. Next question is, do you aim forging agreements with fuel cell companies?
Do we?
Do you intend to forge agreements with fuel cell companies?
So the main piece of equipment that we use is much more on the electrolyzers side. So the process on site that we would go through is that we would, you have an array of electrolyzers, you put water and electricity into those electrolyzers, and out of it you get hydrogen, heat, and medical grade oxygen. So those are the kind of three products that you would be looking to commercialize. The electrolyzer market is, there's sort of two bits to it really at the moment. There's there's PEMs and there's the alkaline electrolyzers. And what we're really interested in is sort of deliverability and reliability. So we don't need the most expensive cutting edge electrolyzers. What we really want are the ones that have been operating for a long time and have good levels of reliability. And one of the characteristics of existing hydrogen supply where it is that there's quite a lot of downtime, and reliability is a really, really important thing. So something that we're very focused on the design of these things is to make sure that that uptime is maximized and that the technology we're aligning with allows us to do that. So yeah, absolutely, we'll have, we'll be putting, at the moment we're kind of technology agnostic, but every site will have specific, will have its design where the technology will be optimized around the operational needs of that. And it could also be that one day we're also, putting fuel cells in these sites as well. But for now, those fuel cells sit on the customer's vehicles rather than in our sites.
Thank you. The last one from this questioner is refers to the oil price rises in the second half of 2020, and the assumption is that the outlook for oil and gas capex spend has improved, and that should help the business of Getech X H2 Green. Can you comment?
Yeah, I mean, I think it's definitely true. I mean, oil had a pretty wild ride that got a lot of headlines through the course of last year, and oil prices now are kind of back to their pre-COVID levels. We've seen a dramatic recovery from the lows or even the negative prices that got so many headlines in the US. I think that for our customers, they take a kind of long-term view, and what's important for our customers quite often is much more the stability of the long end of the curve, rather than just they try and look through the volatility of the spot. But clearly the volatility of the spot shut a lot of investment decisions down last year. So how do I think about it from a business point of view? Well, I think about what people didn't buy last year and has that changed this year. And something we said in the results was that and I said it on one of the earlier slides, is that people carried on subscribing to our licenses last year, and we had no negative revisions to our order book. So our order book was completely honored throughout the year. And that says to me we're doing something right, so that's good. Where people switched off spend was on their short-term project work and the data they bought to support that short-term project work. Now, we've put a few announcements out this year in terms of, sales wins and things like that. And I think it's evident from those that as well as seeing license renewals, we're selling data. And that's quite significant, because last year in the second half, we pretty much didn't, the data market was dead. So the fact that people are back buying data, I think, is an encouraging sign. Do I think that with the oil price back to pre-COVID, our customers are going to kind of like lose capital discipline and just kind of go on a crazy splurge? No, I don't. And I think that the confidence out there is fragile, just as it is in all parts of the economy, I think. But I think it is a much more constructive environment. And there are things that have changed versus last year. And my expectation for the year is very much that, I guess just in the same way last year just got worse as the world went through 2020. I think through 2021, I think things will get better and confidence will strengthen, and that will be fundamentally good for our business. And I think these signs, these data sales in the first half is a good indicator at the start of the year that things are getting back on track.
Thank you. I'm not going to get through all the questions here because I'm conscious that there is a signet after meeting in two minutes. But there's one with a couple of thumbs up, which relates to your personal stake in the
Yes.
company. It talks about options that you hold, but the dearth of cash holdings, and that is a very consistent question from our audience. They do like to see an alignment through cash holdings. So could you?
Yeah, I mean, I'll be very upfront about answering this question, which is that so I have my stake in the business. I bought some shares through the equity raise. I bought £10,000 worth of shares, which may not sound like a huge amount, but my ability to buy shares is somewhat constrained, in part because I had a very expensive divorce a few years ago. So I'm very upfront with my investors about that and the things. So it's not through lack of appetite to buy shares. So my exposure to the business is through options. I think that the other thing I would mention, though, is that when we transacted the H2 Green deal, we did that in a way where we, as the first two commercial milestones were met in that transaction when we acquired H2 Green, the management team that were coming in, 75% of the consideration they received in shares, and they actually opted to take more shares and less cash. And, you know, that is a strong reflection, I believe, you know, of their belief in the value that they're creating in this business. And it's something where, you know, equally, you know, having had, you know, with this fundraise laid out, you know, equity compensation, you know, across my business and my team is like an important thing to be aligning, you know, my staff with the growth of this business. Beyond myself, you know, my COO holds, I've got to do the maths now, but pre-equity, he was holding 2.something% of the business. I guess that's now 1 point something. You know, we've also had quite a lot of investment from the board. Peter Stevens, who recently stepped off the board, having you know, having completed 10 years or more on the board, he was a 5% equity investor pre you know, pre the fundraise, and so he must be now down to about 2.5–3%, something like that. So you know, we believe in the story, and you know, it's our, you know, work is a large proportion of life, and you know, we're here to deliver the success for shareholders, and that's what our focus is on.
Jonathan, thank you very much indeed. If you wouldn't mind, the questions that are open, could we ask you to scribble a short response to them, and then we'll distribute it with the thank yous to the attendees.
Sure.
Fantastic. That's very kind indeed. Very interesting. I'm actually left with a couple of questions as well, but they'll have to wait.
Add them to the list.
Yeah, absolutely.